What's up guys, and welcome to WSM Research. In this channel, we provide you with research on innovative and high-growth companies. Keep in mind that I'm not a financial advisor, and this channel is for educational purposes only. Today we're looking at online dating company Match Group. They are the globally dominant player in this space with a broad portfolio of brands including Match.com and Tinder, which is a market leader among dating apps. Match Group has benefited from the rise of social media and increasing acceptance of online dating. These secular tailwinds caused Match to be one of the best performing stocks over the past 5 years, returning more than 1,400% for shareholders. And there are strong reasons to believe this outperformance will continue. In the past, people would typically meet romantic partners at work or through various day-to-day social engagements. The problem with this is that it forces people to awkwardly approach coworkers and casual acquaintances asking for a date. It is much easier to stay at home and swipe on Tinder where you know everyone you see on the app is also looking for a partner. The pandemic has only accelerated this trend, as people work from home and have few occasions to meet people outside. However, it's always important to look at data to validate your hypothesis. This study from the Pew Research Center provides hard evidence for the increasing acceptance of online dating. 48% of people aged 18 to 29 have used online dating apps. As you move up the age brackets, this number steadily decreases to 13% for those over the age of 65. Furthermore, dating apps aren't just used to find one-night stands. 17% of young users say they have married or are in a committed relationship with someone they met on Tinder, a trend that will likely continue to increase going forward. It's pretty clear that online dating is here to stay, but we will still need to examine if Match Group will continue to dominate the industry going forward. To do this, let's look at some of their brands. Data provider Business of Apps tracks the monthly active users of the top 8 dating apps globally. Perhaps surprisingly, Tinder is not the top player globally, with the Russian-founded dating app Badoo having more global users. Of the top 8 brands, Match Group owns 3 of them: Tinder, Plenty of Fish, and Hinge, giving it a combined 64.5 million users, or about 34% global market share. Another big player is Chinese dating app Tantan. They are owned by publicly traded company Momo, which we may do a video on in the future. Tinder is the dominant player in Western and English-speaking countries. The red circles correspond to countries where Tinder is the market leader. This includes the US and Canada, Western European countries, Australia, India, and the Philippines. Badoo is popular in Southern and Eastern Europe, as well as Africa and South America. Chinese company Momo is the dominant player in China. It's unlikely that Tinder can gain significant market share in South America and other countries where Badoo is dominant, or China where Tantan has a near monopoly. But its position within Western countries is likely secure and will continue to grow. Looking at their most recent financials, in the third quarter of 2020, revenue increased by 18% to $640 million. Earnings per share decreased 13% from 52 cents in Q3 of 2019 to 45 cents in Q3 of 2020. This decrease is purely the result of Match Group's separation from its former parent company IAC in July, which caused them to issue new shares. This was a one-time thing and will not impact EPS growth going forward. The more important metric to look at is free cash flow, because that shows how much cash the business is actually making that they can use to invest in new technology in return to shareholders. This increased 11% to $486 million in the first 9 months of 2020. Free cash flow growth is always a good thing to see because it shows the business is able to turn its growth into real profitability. Taking a closer look at their revenue growth, it was on the back of strong subscriber growth of 12%. Notably, international subscriber growth of 16% outperformed US subscriber growth of 9%, meaning they are focusing on international growth, which is a good thing. Also, average revenue per user, or ARPU, increased by 4%, with an 8% increase in the mature market of North America. ARPU only grew by 1% in international markets, but that is to be expected as they are more focused on subscriber growth in international markets. Once they reach maturity in international, we can expect to see ARPU increasing strongly there as well. ARPU growth is very important to the business because it allows them to achieve greater revenue and profitability without even adding new subscribers. To understand where this ARPU growth is coming from, we have to understand how Tinder and other dating apps actually make money. They have 2 sources of revenue, direct and indirect. Indirect revenue comes from the ads shown on the Tinder app, but the real upside and growth potential comes from direct revenue. Direct revenue comes from subscriptions and services end users pay to Tinder, such as Tinder Gold and Profile Boosters. Tinder Gold costs around $15 per month and gives users a broad range of perks. The most important are the ability to see who likes you even if you haven't matched, getting unlimited swipes, and getting 1 free profile boost per month. It's human nature to want to see who likes you because people get satisfaction by knowing other people like their profile. This is a huge motivation to get a gold membership. Another key lever for direct revenue is Tinder Booster. You can pay around $5 to boost your profile and get around 10x more views for 30 minutes. They also have a super booster, which increases your views by up to 100 times for 3 to 12 hours and can cost upwards of $100. These boosters are genius on the part of Match Group because Tinder super users can spend unlimited amounts of money on the app. For Tinder Gold, people only pay a monthly subscription of $15 a month and that's it. But someone could potentially use a super booster 2 or 3 times a week and spend close to $1,000 over the course of a month. This is a classic case of the freemium model, where the vast majority of Tinder users don't buy any super boosters, but the few that do get addicted to them and end up spending so much that this drives the ARPU up for the entire user base. Also, there's a network effect. When more people use Tinder Boost, this crowds out the people who don't use it. So to compete with those who are using Tinder Boost, more and more people will start to use it themselves. But this is not great for Tinder users because they will be forced to pay for boosters just to keep up. But it's a great thing for Match Group as they will be able to get more and more revenue over time as this trend continues. Overall, Match Group is a market leader in many countries with its Tinder app and will likely continue to grow revenue and profitability as they increase ARPU. It's potentially a great way to play the continued growth of online dating, which will only expand going forward. Keep in mind that I am not a financial advisor and you should do your own due diligence before making any investment decision. But hopefully this video gave you some good insights about Match Group's business. If you remember, in our previous video, we asked you guys to vote in the comment section about each of these 6 stocks you want to see regular update videos on. The results are in, and as of 11 AM Eastern Standard Time on February 1st, Chinese video game streaming companies Douyu and Huya are the winner with 3 votes. These are both super interesting stocks with a lot of potential, so I look forward to making weekly videos about them. Also, because all of the other stocks on the ballot got at least 1 vote, I'll make at least 1 video on each of these companies over the coming weeks. With that being said, thank you guys so much for watching. The first video on Douyu and Huya will come out by the end of the week, so stay tuned. We'll see you in the next one. WSM Research, signing out.